Hello, ladies and gentlemen, and hello, Shakti. How are you doing today?
I'm good. How are you, Natalia?
I'm great. I'm very good. As usual, we talk about stocks. We're sharing insights, portfolios, and our ideas about stocks market. So my portfolio is performing great, considering that I have created that probably just like 2 months ago or something like that, not very long time ago. Over $1,000 gain or around $1,000 gain. There is gain 6%, but I'm a little bit concerned because everyone is screaming market is overvalued, bubble, everything will crash. And I'm a bit scared. Will I lose all my money?
Okay. So if I remember when you picked these stocks, you were going by the fair valuation and trying to pick stocks which are currently undervalued. And most of your holdings, I believe, are undervalued even today. And that's one good thing because when you have a bunch of undervalued stocks, the probability of you losing too much is much limited compared to someone who holds the entire market. In that case, it's me, right?
Yeah.
So I hold the entire market and I also hold stocks which are extremely overvalued if you look at the numbers on paper. So probably when the market does crash, I'll be the most affected.
Okay. So I should be fine no matter what,
I mean,
right?
you'll be relatively fine compared to someone who's holding highly valued stocks.
Yeah. Well, I did invest in market and I
Yeah.
have gained just from the market about 7-8%. Well, I have gained from other companies which I'm relatively okay. So like let's say United Health, it's plus 27%.
When we analyzed United Health, and we were looking at the valuation, and
Yeah,
at that time it was like around 250 or so. What is your buy? Do you see the buy price? It might be around 250 when you actually got it. Then since then the stock has been going up because as per our fair value calculator in StocksDojo, we figured out the company is extremely undervalued.
yeah,
And the proof is in your returns already. And this is one of the best performing stocks. And not necessarily that all the undervalued stocks perform well. For example, Nike and PayPal
no, yeah,
have not done well, even though on paper they are undervalued, because both these businesses have a negative sentiment at this moment, and the market is not sure if they'll be able to bounce back. For
yeah,
example, Nike is struggling with getting their sales up as they are facing a lot of competition. PayPal has similar issue with payment services entering a very competitive space. Even though PayPal is actually growing in their revenue and net income, the market is still skeptical, and that's why the stock price is suppressed at this moment. But if PayPal can figure out what to do in the future, and if the management comes out with some positive news, I think the market will respond. So that's how it works, right? So you sit on a undervalued stock for a while,
yeah.
hope that the management will recover and the market will accept, and then and boom, suddenly it could double. You never know.
Yeah. I bet that's a bit of a gambling. I'm fine with that going to zero.
What is IBIT?
Bitcoin.
Okay, yeah. So it's the BlackRock's
Yeah,
Bitcoin thing. So yeah, it's a
that's a
speculative asset.
spice in my portfolio. Yeah.
Right. Yeah. All good.
CRM, Salesforce, also not performing. But everything else, look at Google, plus
Mm,
30%.
wow.
American Express plus 13. That's HPE, right? And Elevance Health.
Yeah.
Just everything like gain. And I'm just looking at it and thinking, oh, does it does it look too good to be truth?
No, in your case, it's not, because all the stocks that I see here are still undervalued, in my opinion. So it might keep going up, and you are in a better position than the overall market, to be frank. It's just that
Yeah.
some of our undervalued stocks are still underperforming, and it might recover someday in the future, but you never know. And I also saw that URI had a recent exchange, and that could be affecting that return, or else that would be close to 10% too.
So, if you're saying that I'm in a good position, what about you? Aren't you scared or no
So,
fear?
so most of my positions are in the market. The thing about the market is it's currently trading at around a P ratio of close to 28.
Yeah.
Now, according to the mean reversion theory that people keep talking about, the market has always been averaging close to 15%. it's around 12 to 15% if you look at the history. And generally speaking, P ratio reverts back to the mean. And if you go by that assumption, 15 to 28 is like an 80 to 100% overvaluation. And if that is true, and if the market wants to revert to the mean, then I lose half my money. So half my portfolio will go away if that happens. So what do we do in this situation? So what are you planning to do with your?
I'm just gonna keep it.
Yeah.
If the market crashes, then, well, I'll just get more shares because it's gonna be cheap. That's the plan right now. But we will find out if I can keep calm, cool, and controlled and just hold it. Right now I'm confident, but we will find out only when the shit happens.
No, but that's the right approach. That's how it should be. And I've heard Warren Buffett is holding around 300 billion in cash. The entire market cap of Berkshire is 1 trillion. And after
Yeah,
that, almost 30% is cash, I believe, right? So
yeah,
when the market crashes, and he'll be deploying all that into stocks, which will be undervalued at that moment when they all crash, right? So maybe
yeah,
he's now trying to figure out companies which are undervalued. And recently, when you bought United Health, he also bought United Health, and that has performed really well. Yeah, I think they invested around $1.2 billion in United Health, and
yeah,
we had this discussion earlier. And see, it's almost percent up. Yeah.
yeah. He
So
just copied me. He
yeah, he
copied.
copied you, right? So that's the thing, right? Your approach is right, but the problem with that is this, right? Your portfolio is around 20K, right, in Australian
Yeah,
dollars. Now, even if you add $1,000 to that, it's 5%. Right. And if the
yeah,
market crashes by 50% for whatever reason, if you add 1,000, now you're adding 10% extra to your portfolio.
yeah.
But what about people who have bigger portfolios? Now, when you have a bigger portfolio and you're cash poor, now even if the market crashes, you have nothing to add to. Right? So if I have a portfolio of 200,000, which is almost 300,000 Australian, if I put in 1,000, it makes no difference to the overall portfolio. It's like 1% or less than 1%, right? So what do you do in that case? Should I take profits now and be prepared for the market crash and then deploy my profits? Or should I just hold on and let it burn? It's either going down or it's going up, right? So I have this option here whether to sell now, take some profits, or hope that the market will continue to grow even further, because nobody in the planet as of now knows when the crash will occur, when the mean to reversion will occur. And the thing is about P ratios, every year the overall market grows by around 8 to 10%, meaning the companies produce profits and revenues which keep growing at 8 to 10% as
Yep,
a whole. Now, if that
yep.
is the case, the P ratio is also supposed to keep coming down. Now, if it's 28, 1 year it will be less than 28. And if you keep doing that for the next 5 years, it'll be much lower. So it's possible that the market will either stay where it is or continue to grow and keep that high valuation, and the stocks could double, right? And the crash could happen afterwards. So if I take my money out now, I might miss that growth, which could happen in the near future. So nobody knows when to time the market. And
Hmm.
that's why they say time in the market is better than timing the market. And most people lose gains over a longer period of time because they keep timing the market, they jump in and jump out. And I do not want to do that mistake. And I want to stay invested even if there is a crash. That's my policy. I may not have enough cash like you to buy stocks for cheap, but that's the risk we are taking.
Yeah, let's do some analysis maybe. If I
Mhm.
share my screen again,
Yeah.
while I'm sharing, please like, share, and subscribe, which will help us dramatically sharing our platform StocksDojo. You see here price chart, right? So, and let's say this is S&P 500, right? The market basically. Am I
Yeah.
right?
Yeah.
Okay, let's go to all the time, right? And let's say if I invested in the worst time, let's say in 2000, right? How much I would get in 10 years.
Nothing. You see the numbers, right? It was
Yeah,
89, and 10
yeah,
years afterwards, it's still 89 or so, very close to 80.
yeah.
So
But
you
if
wouldn't
I
have made
wait
a penny in
another
that.
5 years, then it's gonna double. So if I wait another 10 years, another 5 years, right? It's gonna more than triple. How long would I need to wait? That's the thing. Is there any analysis that over a certain period of time, historically, market was giving certain return?
So over a 30-year period, we have data to prove that the market will give you at least 8% returns compounded every year, which means if you put a dollar, it
Yeah.
will be $10 after 30 years. So in 2000 of March, if you had put money there,
Yeah.
as per the historical data, on
Yeah.
average, you should have 10x to your money in the next 30 years, which means in 2030, you would have 10 times your returns. So already we are close to 7 times, right? So you
Yeah.
still have room to grow in the next 6 years
Yeah.
to make a bit more. So that's the assumption based on historical data.
Got it. Let's say if I have invested 30 years ago, this
Mhm.
is 1995,
Yeah.
it was $27 dollars. Well, right now in 2025,
That is more than 20 times. That's because, as I said, the minimum was 10 times, right? That's the minimum you'll get. The
yeah,
maximum is unknown, right? I have seen cases where the maximum was close to 40 times, right? In this case, it was 20 times.
yeah,
And so that theory has held well in the last 30 years. And to be frank, in 2023, I decided to put most of my money in the market when it was around, what was the value around end of 2023 in October?
that was 371.
I decided to get in to 2023 October. It was 400 and it's almost 60 plus percentage in returns. My math was, if I go by the same historical assumption, the 404 should be 4,000, right, in the next 30 years. That is fine. But I looked at 2002, and from 2002 to 2032, there was scope. Yeah, there was scope for this to grow 10 times, right?
That's somewhere here, like let's say October,
Yep.
right? It was $56.
56. Yeah. So my assumption was it has to reach 560 in 2032, right? So that was my assumption. And I thought there is still room for growth because when I actually put the money in, it was 400. So I would have still made around 40% returns. If you expand that over 9 years or so, it's not a great return, but I was okay with close to 8%. That was my goal,
Yeah,
right? What
yeah.
ended up being, what ended up happening is whatever I expected to get in 2032, I already achieved and more within the next 2 years. So the math worked, right? And I made a killing with that growth. Now the question is, I know for a fact that the market could just stall now for the next several years,
Mm-hmm.
or it could still keep going up because nobody knows what will happen, right? Since I reached my goal, I could actually take the money out because I already reached my goal, which I plan to reach in 2030 or 2032. I have an option now. May I take the profits or just sit there? Right?
Yeah.
But my goal is, as a long term investor, is I can wait for another 30 years. I don't mind. And that's my goal, right? So my 400 expect. So when I invested, it was $400. I expect it to go to 4,000.
Mm-hmm.
And I will wait until that happens. It could happen in 30 years or it could happen before 30 years. Doesn't matter to me. And will that happen? Again, as I said, over the last 100 to 120 years, that's been the trend because the market as a whole has been very innovative in the US, especially. I'm not talking about the global market. Within the US, the culture of innovation and the policies and the trust that people have in the US dollar is driving the US market to grow by 8 to 10% every single year. And if as long as that happens, I'm very confident that I'll be able to reach that 10x in the next 30 years. Actually, it's next 28 years. I believe I'll get there even before that.
That's confident
I'm very
and
confident.
quite
It
bold.
is my opinion. I'm not giving investment advice to anyone. It is my personal investment thesis. Like it's my philosophy. It could be wrong, but it hasn't been wrong in the last 120 years. So the probability of that going wrong is pretty low.
All right. Thank you, Shakti. It makes me quite confident about what I'm doing. And if market crashes, I'll just
Well, you're
get
in a better
the
position.
cash from all my pockets
Yes, and put it in the market. That's the best time to do it. Yeah.
and get a little bit more. Yeah. Thank you very much. And see you very soon. Bye for now.